Welcome back to Smart Stocks Sam, the channel where we break down the stocks that actually matter for your portfolio. Today, we are going inside one of the most explosive, most controversial, and frankly most fascinating setups in the entire defense sector. We are talking about ONDAS Holdings, ticker symbol ONDS. And here is your upfront brief before we dive in. This company sits on a $457 million backlog, a $550 million cash pile, a 991% return over the past 12 months, and yet, somehow, the stock just took a 4% hit in a single session. We are going to walk through the institutional battle playing out on the charts, the short squeeze mechanics that could send this thing flying, the exact technical levels you need to watch, and a full earnings scenario matrix for what happens when the numbers drop tomorrow morning. Is this actually an $18.50 stock? Or is it a value trap dressed up in a military uniform? Stay with me, because by the end of this video, you will have everything you need to make that call yourself. But to understand why the market is suddenly so nervous, we have to start at the very beginning of this story, because this is not a stock that got here by accident. 3 years ago, ONDAS was barely on anyone's radar, and yet, if you had quietly placed a bet back then and held, you would be sitting on a 9 times return today. 9 times. Over the past 12 months alone, the stock delivered a 991% gain. But here is the thing about momentum. It always attracts two kinds of people, the believers who ride it higher and the skeptics who short it, waiting for the story to crack. Right now, both sides are armed and loaded, heading into tomorrow's Q1 2026 earnings report. And the tug-of-war between them has never been more visible. On one side, you have the growth narrative. ONDAS has evolved from a niche drone company into a full-spectrum defense platform with prime contractor access to the United States Army. The bulls are pulling hard on that rope, but on the other side, the bears are pulling just as hard with fundamental weight. The biggest piece is dilution. Nearly 2.8 million shares issued for the Mistral merger. Thousands more registered for resale from the Worldview deal. When extra supply hits the market at the same time, momentum players are locking in gains. The math gets ugly fast. That is the pressure we are watching in real time. Now, while these growth numbers look extraordinary on the surface, there is one hidden metric we will get to in just a moment that changes the entire picture. But first, we have to understand the bridge that ONDAS is trying to build. ONDAS made a bold strategic decision. They stopped being a single-product drone company and pivoted to become what management calls a system of systems platform. Instead of selling one tool to the military, they now want to own the entire toolbox, everything from ground level to the edge of space. The centerpiece of this pivot is the Mistral merger, valued at $175 million. This was not a revenue acquisition. It was an access acquisition. Mistral hands ONDAS a direct lane as a prime contractor for the United States Army. They are no longer waiting to be selected by someone else. They are sitting at the table where the big contracts get written. Then add the Worldview investment, which gives them stratospheric balloon capabilities for layered ISR, intelligence, surveillance, and reconnaissance, drones at low altitude, balloons at high altitude. They are literally trying to own every layer of the sky above a battlefield. That is the moat that justifies the premium valuation thesis. But all of that M&A activity leads directly to the single most important number in this entire story. $457 million. That is the pro forma backlog as of March 31st. Write that number down. Circle it, because that is the entire thesis for every institutional investor who owns this stock today. To put it in perspective, that backlog is roughly 9 times the company's current annual revenue. This is not just potential business scrawled on a whiteboard. This is a concrete pipeline of contracts already in motion. $264 million from the Mistral backlog alone, $80 million in active demining tenders in Israel, and a $68 million order for military engineering vehicles. For a long-term investor, this is what is called long-duration visibility, a roadmap of exactly where the revenue is coming from, not just this quarter, but for years to come. If the story ended right there, this stock would already be trading at its all-time high with no debate. But when we dig into the actual numbers, that is where the narrative hits a very real wall. Here is the disconnect you have to understand if you are going to trade this intelligently. Tomorrow's Q1 report is expected to show an 831% year-over-year revenue increase. If you heard that number in isolation, you would assume the stock was already at $20 or $30. But the market is already charging you a massive premium for that future growth today. ONDAS is trading at a price-to-sales multiple between 80 and 87 times. In a high-interest rate environment, that is an extraordinarily dangerous neighborhood. A multiple that high leaves almost zero room for any disappointment. And here is the part that rarely makes headlines. The company posted an EBITDA loss of $102 million in 2025. Breathtaking growth, breathtaking cash burn. Growth without profitability is not inherently bad. It just requires patience, conviction, and an extremely high tolerance for volatility. So if the company is burning cash at this rate, the natural question becomes, how long can they actually keep the lights on? This is where the good news lives. The gas tank is full. ONDAS is sitting on a cash pile of over $550 million. Their current ratio, the standard measure of a company's ability to pay its short-term obligations, sits at a very healthy 4.8 times. Management has been transparent about the timeline. They are calling 2026 the year of peak integration and peak cash burn. They do not expect to reach company-wide profitability until Q1 of 2028. That means if you are buying this stock today, you are making a 2-year bet. 2 more years of red ink on the income statement in exchange for that massive backlog finally converting into recognized revenue. That is the deal on the table. Whether you take it or not depends entirely on how much you trust execution. And speaking of trust, let us look at who is actually buying and who is actually selling right now, because this is one of the most fascinating divergences I have seen in the market this year. On the institutional side, the picture is overwhelmingly bullish. 340 institutions are holding over 181 million shares. Vanguard, BlackRock, VanEck. Names that do not show up in small-cap defense stocks by accident, and 245 of those institutions actually added to their positions recently. That is not noise. That is a conviction signal. But now, look at the insiders. Over the last 6 months, 21 insider sales and exactly 0 insider purchases. Not one. CEO Eric Brock sold 475,000 shares for approximately $4,600,000. Insiders sell for all kinds of reasons: taxes, diversification, personal needs. It does not automatically mean trouble, but when the captain is trimming his steak heading into a major earnings catalyst, that is a flag you cannot simply ignore. If the backlog is as bulletproof as management says, why isn't a single insider buying a single share? Despite that insider selling, Wall Street analysts are looking at this stock and seeing a very different reality. The analyst community is about as bullish as it gets. The median price target sits at $18.50, with the stock currently trading around $9. That implies a 100% premium, a literal double from current levels. H.C. Wainwright is even more aggressive, publishing a price target of $25. Oppenheimer has publicly called this a path to $1 billion business. Now these analysts are modeling 12 to 18 months out. They are not necessarily focused on the volatility of the next 48 hours, and that distinction matters enormously right now, because tomorrow morning, everything changes. May 14th, pre-market. The numbers drop. The market is looking for revenue between $39,360,000 and $39,600,000, with a loss of 3 to 6 cents per diluted share. But every serious ONDAS watcher knows the raw numbers almost matter less than the commentary. The real test is whether management can give a precise, credible timeline for when that $457 million backlog starts converting into recognized revenue. Any vague language about the Mistral integration, any hint of delay, and the market will show no mercy. But what happens if they actually beat? That is when the mechanical dynamics of this stock become something extraordinary. The short interest on ONDAS right now is 34.02% of the total float. 1 in every 3 shares available to trade has been borrowed and sold short by someone betting on a decline. The days to cover number is 4.19, meaning it would take more than 4 full trading days for every short seller to exit their position simultaneously. Can you see what that means if earnings surprise to the upside? Short sellers would be forced to buy at the exact moment buyers are piling in from the other side. That is a short squeeze, and in a stock with this kind of float concentration, it would not be a gentle drift higher. It would be violent and fast. But here is the question that keeps traders up at night. What if the catalyst never comes? What if the backlog converts slower than anyone expects and the shorts turn out to be right? The options market is already taking sides. For the May 15th expiration, that is the day after earnings, the put-to-call ratio sits between 0.22 and 0.30. That is a strongly bullish and speculative lean. Traders are buying calls at a rate of more than 3-to-1 compared to puts. They are betting on a move higher. The max pain level, the price point where the greatest number of options contracts expire worthless, is $9.50. That $9.50 level acts almost like a gravitational center. Right now, the heaviest open interest clusters around the $9 put strikes and the $10 call strikes. That $1 range between 9 and 10 is your immediate battleground. Everything else is noise until we know which side of that range this stock is going to close on tomorrow. But the chart itself tells us that the bulls are walking into tomorrow with some serious technical headwinds. The daily technical signal is currently reading a strong sell. The stock is trading at approximately $9.04, which puts it below both its 50-day moving average of $9.23 and its 200-day moving average of $9.76. When a stock falls below these moving averages, they stop acting as support and flip to become overhead resistance, which means that even if the stock bounces, it has to fight through layers of selling pressure to get back above those levels. The MACD is also confirming a sell signal. The one saving grace is the RSI, which is sitting at 47.5, basically neutral. That tells us the stock has not yet entered oversold territory, which means it still has room to fall further if the news comes in negative tomorrow. So let us talk about the exact levels you need to have mapped out before that opening bell. Right now, dip buyers are defending a base between $9 and $9.10. That is your current floor. But your real line in the sand, the level that determines the short-term direction of this trade, is $8.80. That is the primary support. If we see a high-volume breach of $8.80 with conviction, the stock could flush quickly down to the gap zone between $8 and $8.50. That is not a rumor. That is what the chart is showing. On the upside, $9.50 is your first major hurdle. Clear that on volume, and the next supply zone comes into view between $10 and $11. That range is where previous rallies have historically died. That is where you should expect sellers to re-emerge if we get a post-earnings squeeze. And now, the moment you have been waiting for, the 2 scenarios that define your entire game plan. Scenario A, the bull case. ONDAS beats the revenue consensus, delivers a clean and confident update on the Mistral integration, and provides a specific and credible timeline for backlog conversion. We break above $10, the short squeeze ignites, and we make a rapid move toward the recent high of $11.60. Could we see a move all the way toward the Analyst consensus of $18.50 in the months that follow? Potentially. But that would require flawless execution, no integration surprises, and a broader defense sector tailwind. Scenario B, the bear case. EBITDA losses come in wider than expected. Or worse, management gives a vague, non-committal answer on the backlog timeline. We break below $8.70. The shorts get aggressive, and the stock flushes towards $7.50 before finding real support. Given the 34% short interest, the move in either direction is not going to be polite. It is going to be fast, and it is going to be decisive. At the end of the day, when you hold the $457 million backlog in one hand and the 87 times price-to-sales multiple in the other, you arrive at a very clear conclusion about what kind of stock this actually is. ONDAS is the ultimate show-me story. The foundation is genuinely impressive. A $550 million cash runway and a nearly $500 million backlog do not lie. But the valuation is sky-high, the insiders are trimming, and the path to profitability runs through 2 more years of red ink. This stock does not reward guessing, it rewards patience and precision. For the short-term trader, $9.50 is your gateway. For the long-term investor, you are making a 2028 bet and trusting that the execution follows the vision. Now, before we close out today's analysis, a quick but important note. Nothing you have heard in this video is financial advice. I am not a licensed financial advisor. Everything discussed here is for educational and informational purposes only. Always do your own due diligence. Consult a qualified financial professional before making any investment decisions. Past performance is never a guarantee of future results. Investing in small-cap stocks involves substantial risk, including the risk of total loss of capital. Never invest more than you can afford to lose. And with that said, here is what I want to know from you. Are you buying the dip or waiting for breakout confirmation post-earnings call? Drop your answer in the comments below. I read every single one, and I will be replying throughout the day as the earnings reaction plays out. If this breakdown gave you clarity going into tomorrow, do me a favor and hit that like button. It genuinely helps more investors find this channel. And if you are not subscribed yet, now is the time. We do this kind of deep dive analysis before every major earnings catalyst, so you are never caught off guard. Hit subscribe and turn on notifications so you never miss a breakdown. And if you want to go even further and directly support the work we do here at Smart Stock Sam, YouTube has a super thanks feature right below this video. Every contribution goes directly back into the research, the data, and the production that makes these videos possible. Stay sharp, keep your stops tight, and I will see you in the next one.